Hey traders, Raghee here. Welcome to Charts and Coffee. Happy Monday, everyone. Hope everyone's doing well. Had a good weekend. Got some time away from the screen and the charts for a bit. All that good stuff, and that you're raring to go for another action-packed week. What do we have coming up this week? And if you joined us for the Raghee Report Sunday last night, 6:30, new start time, by the way, 6:30 p.m. Eastern. You know that one of the first things we want to do on a Sunday is take a look at what kind of economic events are going to be happening, not just today, Monday, but throughout the week. And that means at the top of, the next hour, 10 a.m. Eastern, we have the ISM Services PMI. Now, this would fall under the category, if you will, of inflation. And of all the macroeconomic pillars, jobs would be sort of a minor one, but inflation, growth, we know that inflation really is the main mover. And that's why PMIs, CPIs, PCEs are so important, then following things like non-farm initial claims, JOLTS, different jobs numbers. And I've always felt that different consumer confident reads would track more with jobs. Different consumer confidence data releases. If you're thinking, all right, Rog, where would I put that in this whole idea of, say jobs growth, inflation? I would kind of categorize that under jobs. People seem to be more confident when they have a job. And that seems to be where I would place that, which would mean it's the second most impactful. All right. So with that in mind, I hope that you've already checked out the economic calendar. It's not devoid of any high impact. In fact, we have this quirky little Wednesday release here, Bank of Canada. The interesting thing about the Bank of Canada release is about, I think, the last meeting or the time before that, they came in less hawkish. In other words, we expected a certain rate and they came in a quarter point below that. And the US equity markets took off when that happened. So keep that in mind. European Central Bank would be the most impactful in terms of other central banks impacting the US, mainly because of euro's inverse or negative correlation to the US dollar. But keep an eye on that BOC Wednesday, 10 a.m. Eastern. All right, gang. So as always, this show is about your questions. So let's jump on into them. And I'm going to get these charts sized and out of the way. So I hope that you all are looking at the daily time frame, by the way. And when you're looking at these indices, for example, the S&P index on the daily, even though we might be down a little bit today, please realize that this is moving lower in what is a very fresh but established now uptrend. So the Dow's been in an uptrend, industrials, transports, healthcare, financials have been in uptrends. So those 5 charts are a green trend, as I like to call them. And it makes the S&P sort of at some point following along fairly inevitable. It's going to be a little slower to adjust because the NASDAQ, which is your XLK, XLC, XLY sectors, is not in an uptrend. And that's going to keep the S&P from moving in quite the same scope as the Dow, right? Directionally, it's going to be a little slower because it's having to fight sort of this weight of the NASDAQ. All right. So with that said, first question coming up from Avi. S&P, sure, let's jump on over there. They want to sell at a Darvis signal. Well, if we did do that, that was the first. The first was our minor high, and then the pattern completed on the 2nd of December as we sold off through basically 40.54. Yeah, so that's not just a pattern. That's really VWAP and 200 working together as resistance, but I won't look at that as a short because we're focusing on a little bit of a green. So don't worry, gang. If you can't short the pullback, a lot of traders get sort of a little too fixated on, what peak can I short rather than if the trend is moving higher, which retracement could I buy? So I'm not worried about selling at resistance in an uptrend. I'm much more focused on buying at the retracement. Now, if you're looking at shorting at resistance, that's where the NASDAQ would make the most sense. That's where any yellow sector at an overbought level at resistance would make the most sense. All right. So we definitely have a very fresh uptrend in the S&P. All right, next up is, I appreciate that, top spin, smash that like button. I appreciate that. Thank you. All right, next up. Hey there, Robert. How are you? Good morning. Are there certain sectors that you feel are the most important to keep watch on for this month? Oh, Robert, it doesn't change really month to month. It changes based on structure, but the core XLK, XLF, XLV, XLY, XLC, those are going to always remain steady. And I would add to that transports at XIYT and then industrials XLI. But as long as I'm keeping an eye on tech, consumer discretionary, communications, financials, healthcare, those are your major weighted sectors in the indices. That's what I'm going to be keeping an eye on. And then I'll look at some of the industries, if you will. We'll look at energy. We might look at solar. We might look at software. We might look at semiconductors and try to discern where some of these these main sectors versus some of these industries, where they are. For example, SMH is a relative outperformer within what we would clearly consider something much more related to the NASDAQ. XLE is moving generally higher, but then so is solar, right? So it's kind of interesting, some of these industries that are turning into uptrends, giving us buy the dip. So I'm going to focus, really, in a nutshell, Robert, I would focus mostly on which sectors are in an uptrend where I can essentially buy the dip. Yeah. All right. Next up, Dimitri asks, what time today is the long-term portfolio management session from the decoding volume class? That's today at 2 p.m. in the classroom. So the same classroom that we have been meeting in for the entirety of the live trading. That'll be where we meet for this bonus session, the last session we're doing for the class. That's going to be today at 2 p.m. Eastern in that volume decoded classroom. Yes. All right. Thanks as always. All right, Bernie and Mr. Walker, absolutely, I appreciate smashing the like button. I appreciate that. All right, so next up is, what are my thoughts on natty gas to the long side? All right, let's go take a look. So jumping on over to the Thinkorswim charts after a little bit of trading view. If I want to get long natty, all right. And I have been asking myself what would be a great level for that, even though we're outside of the seasonal 305. The -2 standard deviation looks very good. We've gotten close or hit it about 3 or 4 times prior. We do seem to run out of steam at, let me grab my drawing tools here. We do seem to run out of steam as we reach for the mean. So the mean is resistance right now. There's our mean right in there. That's where we run into a ceiling. That's where we run into resistance. And then as far as a floor, see that right around the -2, we seem to be going back and forth. The -2 would sit at about, oh, this is NQ. Sorry, you asked me about NG, right? I do that. Sorry about that. Same idea though. I want to look at, in this case, -1. So here's my support. And by the way, gang, this is what I love about it. Notice I'm going to go through the same process, even though I typed in the wrong symbol. The first, I'm going to go through the same process. Support, support, support. So this is a -1 standard deviation that I'm looking at. Are we exhausting at the mean? Not quite. We seem to be exhausting just above it, interestingly enough. So notice I'm starting off with some volume, as you can see here. Right in there. All right. So we're running into a ceiling there. The other thing is, of course, I can even consider long or short to a certain degree based on the neutral market trend. I've got to wait. I've got to wait. I don't have anything imminent. And again, if it's not in a trend, that means we can look for fades. Well, here's another way of looking at it. So I'm going to step away from the volume for a moment and see what I can find with price and price alone. We're sitting here at right there. That's your Darvis. It's your Darvis-based support. And if we can find a nice reversal pattern from here, this could be an interesting setup. Now let's take a look at one other thing, and that's where's the slow stochastic at? Not too close. Not too close, gang. Not too close at all. If it can get closer and closer to the 20, that could mean it's oversold, and that might be helpful. All right, so this is NG. And by the way, the breakdown I was doing on NQ is equally applicable, right? The breakdown I was doing on NQ was equally applicable. So if we get close to -2 on the standard deviation, I would absolutely start looking for a potential buy on the NAS or on relative outperformers within the NAS. Maybe it would be the XLK if it's a relative outperformer. Maybe it might be an individual stock. It does look like XLK, we might know by tomorrow or Wednesday whether or not we're actually confirming that transition into a new, fresh uptrend. And I sure would want Apple and Microsoft to be part of that. That would be very important, gang, because that adjustment without Microsoft, please be very hesitant. If we don't get that adjustment to the uptrend on the XLK without Amazon and Microsoft, yeah, this may not have that much to stand on. And we might, instead of going with the tide, right, which is the XLK, the sector, or even one of the larger boats, right, we might say no thanks, no thanks, and then look at the trends that are moving higher. Visa, MasterCard, Nvidia, right? There are a number of green trends here. So this is where a boat might be better in lieu of the tide, especially one that is above the 200 like Visa is, right? We have quite a few of those that are looking pretty good. All right, so that's the way I would look at the NAS, by the way, since I inadvertently typed in NQ instead of NG. All right, so moving on. So if we, by the way, this kind of takes me back to Robert's question, right? Are there certain sectors? So let me tie that, because it's a good juxtaposition. Robert's question earlier said, are there certain sectors that I'm going to be keeping an eye on? And it doesn't have to be the heavily weighted sectors, but again, please don't underestimate the power in looking at when the broader sector is both green, as you can see here, and then the heavily weighted stocks within that sector are as well. See, this is markedly different than what we're seeing on the XLK. Again, this is at the heart of what I do in the Sector Secrets room. This is understanding ETF, boats and tide relationship. Because if Berkshire Hathaway and JP Morgan were still, say, yellow like Bank of America, and I am in Bank of America, by the way, but if it was yellow like Bank of America, I'm also in Wells, then if this one was, say, the number one stock as opposed to Berkshire, then that would be a little bit of a problem for XLF. But since your heaviest weighted stocks are green, that's what you want to see, right? So then let's say we look at healthcare. Healthcare is running into a similar situation. This is, for a lot of folks at Rog, how do I know if I'm going to go with sector or individual stock? So when I send out the alerts in the Sector Secrets Mastery, when I choose to go with an individual stock over the sector, it's going to be one of two reasons. The stock, the boat, might be the better choice, or the tide simply hasn't pulled back. And that's always going to be, two of the reasons. But take a look here. This is a little bit problematic, right? I've got Johnson & Johnson, awesome. Lilly, awesome. AbbVie, Pfizer, Merck. I mean, what's not to like about the XLV, and even including the XLV itself? My problem child, if you will, with that neutral trend is UNH. And UNH and Johnson & Johnson are two of the heaviest weighted stocks in this group. And without participation, ideally from both of them, you got a little bit of a push-pull going on. And this is why, gang, understanding what's in the index, understanding what's in the sector is so important. And unfortunately, so overlooked. All right. So overlooked. Okay. So I hope that makes sense. All right, I think we're done with the questions here, gang. So unless you all have any other questions for me, I'm going to take one more look at the broader averages here, and then we will wrap up our morning. And remember, gang, when we open, and we're going to be day trading the open as we do 5 days a week in the Sector Secrets Mastery. We're going to be taking a look at the open together. A couple important things. What underlying market trend are we inheriting? Take a look here, gang. We have a downtrend that we are inheriting, right? 5 minute, as the bell rings here in 13 minutes, we're going to see we're inheriting weakness. That means until that changes, I'll be looking for shorts and shorts only. NASDAQ, same thing. Dow, same thing. But here is, and I've talked about this in a few free videos, this is where it gets interesting. Are bonds, right? Are bonds also in a downtrend? And here's what's interesting to me in terms of risk appetite. Unless this goes red, which it hasn't completed yet, and if we are able to get back to neutral, yes, we're able to get back to neutral, this could be a very tricky environment for shorts in the broader averages, NASDAQ, S&P, Dow. We would want to get a short on a rally anyways, meaning we would want to short into strength, fading. But if this stays neutral, then remember, let's not commit too heavily to the short side, because if the yields are falling, right, which is the bonds moving higher, bonds and indices are usually much more directionally sympathetic. They're much more directionally correlated because equities love lower yields, and lower yields are reflected in the ZB and the TLT symbols by moving higher. So keep that in mind. All right. So last question before we call it a morning. Zane asked, so I day trade every morning in the Sector Secrets room. Yes, Zane, every morning. Hang on. Let me show you the schedule here. For those of you that might not be familiar, yes. So every morning, Monday through Friday, we day trade together. This is the schedule in the room. So my favorite hour of the day is exactly the one that we set aside in the Sector Secrets room. That's my favorite hour. We go from 9:20 to 10:35 Eastern. So it's an hour and 5 minutes. That's by far been since June. Since June, day trading has been the most effective strategy, being nimble and day trading for me this year. And that this hour has been the most effective hour for me, day trading this year. So yes, my mastery session, this is it right here. When the masteries were first developed, Zane, to your point, they were once a month. And I just felt that was not nearly enough. And therefore, I wanted my mastery to reflect the things that I was doing. We have a tech session that the Lorna bot does. She'll be doing it at 1 o'clock today, by the way. We have a reschedule on that one to 1 p.m. today. So just an hour later. And we have that coming up. I'll be day trading in just a minute. And we have longer term conversations, swing trading, ask me anything. And then, yes, we day trade 5 days a week. All right, Zane and everybody. Thank you for the question. I appreciate that. So no, it's not once per week. No. It's 5 days a week. And then these are all the sessions in that room. All right, gang. As always, thank you so much for being a part of the Caffeinate and Dominate crew. I will see you tomorrow. Same time, same station. My volume decoded, folks. Longer term conversation today, 2 to 4 p.m. Eastern. And my mastery folks, I'll see you right about now for our morning day trades. Be good to each other, gang. I'll talk with you soon.